Hi guys, Alex here with Inside. Today I'm taking a break from reviewing amazing investment projects, and I want to give you 5 key things you need to know prior to investing here in the UAE so that your experience is enjoyable, free of stress, and yields the highest results. You'll also notice that the microphone and the laptop switched around if you watch my videos, so I'm mixing it up. So let's go. The first one is the different brackets of capital appreciation and what that actually means. There's 3 major brackets where one is 100 to 300+% returns. Yes, it's possible. And this is for projects that are in the luxury segment of the market. We're talking 18-20 million dirham minimum starting point, and maybe a little bit less, but generally that's the segment where it's possible. So examples have been Royal Atlantis, Bulgari, where people bought units a couple years ago for 12 million and resold them for 40 a couple years later. So it's possible. For those of you with that cash flow, happy to work with you to realize those. Then there's the second segment. This is where most people tend to orient. And this is where there is about 20-25% annual price appreciation, which because of the payment plan structure here in the UAE can yield 50 to 80% returns in 2 to 3 years. And here we're talking about projects that will start at a minimum of about 2 million dirham for a 1-bedroom, I would say 2 to 4 million for a 1-bedroom, 3 to 8 million for a 2-bedroom, because here those are going to be the kinds of returns. So you understand the pricing and understand that if you want that kind of return, this will be the investment. Some people want the impossible and say, I have $500,000 and I want to make 10x. Doesn't work, go invest in crypto. So the lowest end of the market, and lowest is relative, we have returns where it will be 5 to 15%. And this is where we're talking about budgets, I would say 1.5 million dirham and below. And typically these will be investments that might be better suited for passive income. They'll still have some capital appreciation. It also depends on the developer, of course, and the location. So it's possible. And in this segment, I will also lump the secondary market because on average, the off-plan market will appreciate significantly more. Secondary properties tend to have already reached the saturation points and they're not going to be super good for capital appreciation. So that's point number 1. Point number 2 is we need to have a very clear resale and exit strategy for any investment before we even begin. I spend a lot of time educating my clients because before I worked in private equity and I'm used to working with a portfolio strategy in mind, where it's not just let's do this thing and see how it works out. I don't operate that way. For me, it's if we're investing in this, how are we exiting this investment and how are we realizing the return? Who's buying it? What's the profile of the buyer? How big is the spectrum of those potential buyers? What objections might they have? So I'm thinking 5-10 years out immediately before we even take a step towards closing a deal. Why is this important? Because investments don't work by magic. They work based on, yes, there's an aspect of intuitive feeling and feeling aligned, which those people who have money all have very clear intuition, and then solid financial analysis where you can predict what's going to happen and why based on the quality of the developer, the master plan, and a solid asset, let's say, allocation and portfolio strategy, which I help you develop. Here, it's important for us to understand what's the time frame of your investment. Is it 2 years? Is it 5 years, 10, 15, 100 plus, whatever it is? How are we planning to exit and to whom? And so that we talk this through to make sure you have a very clear picture of how this process is going to go for you for the next 2 to 5 years plus. And we can then proceed to the following stages. Point number 3 is the process of even getting units. So when we're talking about that middle segment, which let's say most people want to focus on of 20% plus annual returns, this means the project is very high growth. This means you're not the only smart one. That means there is thousands of other people in the world who had the same idea. And they want to get into this project too. So what does this mean? It means that there is a specific process in place called the EOI, or expression of interest process, where we submit an expression of interest to the developer prior to the project launching. Usually this comes with a token amount of 20 to 100,000 dirham. Typically it's refundable, but not in every case, by the way, so important to know the nuances. And then based on submitting that, we basically get an option to receive allocation at the launch. It's not guaranteed. Usually for a 300 unit project, there will be 3,000 to 5,000 expressions of interest. So it's not as simple as just saying, I want a unit. And then what happens then at allocation? This is where I go use my relationships that I built over the years, where I can get units that other people cannot, even in the hottest launches. And it's happened time and time again, where my clients want specific layouts, specific floors, specific pricing, and I go and get exactly that one-to-one match. So this saves you time, and you know you're going to get exactly what you want. And if we need to adjust the strategy, I will help you with that as well. Then once this allocation happens from the developer and they fulfilled all the expressions of interest, then there's a remainder of units that where people said no, because if they say no, the money is refunded from the EOI, and those units become cancellations, and then they're released to the general public. Keep in mind, at this point, the prices are generally increased, not always, but usually they're increased by the developer. So when people say, I want to get a unit in this project, show me the inventory, it just does not work that way. If you want to be in a high yielding investment, you have to understand decisions are instant. There is no think about it. That's why we need to do a lot of, let's say we need to spend time beforehand to get you comfortable with the market, with the investment, with the developer, with the project, so that we know exactly what we need and then we go get it. Not, well, let me satisfy idle curiosity and maybe see what it comes out to. That's a waste of everyone's time. So the way that it works is we find out what we need, we execute on it. And this also means that if you want to see the inventory and there's inventory available, usually this means this is the leftovers of what's happened after the EOI process has already been fulfilled. And I've had investors who say, I want to wait for that, and they're surprised by the prices because they're 10% higher. So I'm recording this video to help educate you so you understand what you're walking into. So there are projects in the lower end of the segment where it's the 5 to 15% returns, where yes, it's possible there is inventory, it's less of a project in demand for that exact reason, and there we can go and select and see what's available. And there we might have, a couple days to think about it, because even in the 5 to 15% segment, you're still going to have units that are gone very quickly, because once again, Dubai is a seller's market, meaning developers dictate the conditions, not the buyers, and they know they will sell out, and they do sell out consistently. Entire buildings here sell out in less than an hour sometimes. So I know that's a shock for some people from America or Europe, but this is the Dubai market. So if you want to play in it, you need to get used to the rules and manage your expectations. So just to summarize this part, I know it's been a lot. For step number 3, the EOI process, we need to understand if you want a high growth project, the decision needs to be very quick. If you want a project where you can see the inventory, it means one of two things. Either there's leftover inventory and it's a less high yielding project, or the project is not very good. Because I know examples from well-known developers where 6 months, 8 months after launching, there's still dozens of units available. To me, that's a huge red flag, and you should realize that's the case for a reason. Number 4, this is where we go into the actual strategy for selecting the projects. And here there is one of two ways we can go about it. What some people I see doing is follow the herd mentality, where they say, oh, look, it's Imar, or look, it's Demak, or insert any other brand name that they've heard of, and they think it's good just because they've heard of the brand. Not the case at all. So there are reasons that I only work with the top 10% of the market, and because I only select investments where I would invest my money myself. And unfortunately, or fortunately, that eliminates most options, because there's always payment plan nuances, there's always location nuances, quality nuances that you from the outside simply cannot tell. You cannot tell this from looking at a brochure. I can't stress this enough. So you always have to have someone who can go deeper, who understands the market better than you do, and to realize that it's a blessing to have someone like that on your side who will work with you for the foreseeable future. So here, I would say one strategy is to follow what everyone else is doing, and that could be like, let's invest in Dubai Hills or Dubai Marina or downtown. And while that can be good, the highest returns are going to be another approach, which is more of a contrarian approach. If you look at the best investors over time, like Warren Buffett, typically he will do things that other people cannot predict. And that means you get to go against the grain a little bit. So in Dubai, it's a little bit easier in real estate because, of course, we can choose areas like Dubai Islands, like Ras Al Khaimah, like the canal area near Safa Park, where you have Four Seasons residences and the surrounding developments present excellent investment opportunities, you need to really handpick those locations. And sometimes it's before everyone else knows about it. And so this is also where this, intuition helps you predict whether that's an aligned opportunity. So I tend to not gravitate towards mass mentality based on brand. I tend to focus on where's the alpha. Those of you who are familiar with financial markets will know that it's where is the market here, and then there's underpriced asset where we think it will outperform the market over time. So that's my job, to help find that, to help find where there is that significant opportunity for growth, and to help secure the best possible unit, best possible layout, best view in that project, so that I can then work with you to help you resell it. I think that's clear. Let's talk about the final step. You need to understand the deal process, that there are different stages to it. Normally, after submitting, for instance, the EOI, there is a booking form that's generated. Sometimes it can take a couple of days that you sign. Then you transfer the initial amount. And here there can also be nuances. Sometimes if you need to pay in cash, like some of my clients do, we can arrange a transfer from your country to here in Dubai in cash, where I can give it to the developer. I regularly walk around with somewhere around $1 million in dirham in cash, bringing it to developers, because that's I have very trusted relationships with my clients who know that I have their back. Then there's opportunities to pay through crypto. There's opportunities to do wire transfers in different currencies. This is where I help you find the best option for you. And when we're going through this deal process, there's a bit of negotiation that can happen. Now, I've negotiated payment plans for my clients. I've negotiated discounts for my clients that you will never get unless you know exactly whom to ask and how to ask it, based on owed favors or based on the existing relationships that I have. It's not like you can walk in and get this. You need somebody who is an insider and has these relationships. In terms of discounts, the range can be between 0% and 5% for single units, sometimes a little more. For bulk deals, which, by the way, when people are buying bulk, like floors, they receive first allocation always, before even anybody from the EOI process. So by the way, by the time we get to allocation for the general public, bulk investors already took about 20-30% of the project. So if you have that liquidity, I would say we go with that strategy instead. Then coming back to the deal process, I help you negotiate on behalf, on your behalf with the developer, and then they generate the sales and purchase agreement, and the process is complete. So something else to just keep in mind to manage your expectations. Developers are people as well. They have people working there. That means they make mistakes. Sometimes it takes an extra couple iterations to finalize the money transfer, or to make sure that the currency conversion rate is straight, to make sure that there are no mistakes in the documents. So of course, you're meant to be understanding and also just read all the documents yourself. And I'm also here to support with this. So let's summarize. I wanted to share this with you because these are questions that I receive very often and I have to educate people on almost every single day. And hopefully this video can help consolidate it so you understand, depending on what your chosen strategy is, how much money you want to make. You understand how quickly the decision process needs to be. You understand the process of getting the units, and that there's a lot that goes on behind the scenes that I, as your advisor, go through to actually make sure the process for you feels and looks super simple, but there's a lot of things that go on in the background. And so I like to tell my clients that if you want a broker who sells you the first possible project that's launching, go work with the thousands of people on the market. If you want somebody who's a financial expert and is a portfolio manager and understands how to build strategies, not just for individuals, but for families and funds, and understands how to curate and exit those strategies, and will actually work with you to do this, then you can come work with me and I'll be happy to support you. So thank you guys for watching. I hope this clears some things up. You understand how the process here in Dubai works a bit better, just from a fundamental and logistical standpoint. Hopefully you have a broader understanding of the market. If my approach resonates with you, you value how I view the market and want to work with the top 10% for the highest yielding results, please send a message, say it's for Alex. I'll be happy to connect with you, understand you and your family's needs, and we'll take it from there. Thank you guys for watching. I'll see you next time.